Good morning, everyone. Welcome to the CBDC Forum, and this is a Fintech4Good Venture University series. And we organized this event to really have with three main goals. The first one is that from COVID-19, we see that learning has changed into many different formats, and we have to not only just study in the classroom, and learning can happen in different way. And the more effective learning is that you can not only just learning in the classroom, but also just can engage with the experts in the space, and also some of you may also take action to just apply what learned from the sessions and then in the work. So I think this is one of the effort from the Fintech4Good Venture University to just bring the industry experts to just inform our community and on the specific topic, central bank digital currency. And the second purpose of this is, of course, CBDC is a very important potentially disruptive instrument in the digital financing space, and where that we have lately many CBDC related stories or actions happening in many countries, and we use this forum to share what's going on in the world on CBDC and how this can potentially just transform the existing financial space, and also potentially influence different countries' monetary policy and economic structure. And of course, the third purpose, and also one of the most important one, is to share United Nations Secretary General's digital financing for SDG task force findings. As some of you may know, that on August 26, the Secretary General's digital financing for SDG task force launched the final report, and which just positioned the citizen-centric financial system as the key how digitalization is transforming our world. And there are a lot of interesting findings, and which are very powerful, and I think will just give us a lot of thoughtful ideas where our financial system will just leading toward. And of course, we also want to showcase a number of digital financing for SDG innovations, where that's we can see how the ideas can be translated into powerful platform or powerful product, and which can just help individuals becoming more sovereign in making decision to just drive their using their dollar to just make an impact, or to just scale up SDG related work. So before we move on to the panel discussion, and now that's just move to the first panel. Before that, I want to also mention that feel free to just write on the chat box which city are you based in now, and we have altogether around 160 some folks who registered for the event, and they are coming from different countries. It'll be interesting to know that where you are, and if you have any questions during the event, feel free to just either ask them from the Q&A function, or just write them here in the chat box, and we'll bring your question to the speakers. And for each panel, that's the speakers will speak, each speaker will speak up to 10 minutes, and then we'll just have follow the panel discussion, and then we'll try to also get your questions answered in that specific panel. And now I want to just give the floor to Marianne, and then The floor is yours.
Uh, 10 minutes.
Yes.
The main findings. Let me just see. Yes. So let me just see here. Yeah. So really, the task force has been working for the already said, and the task force was co-chaired by Achim Steiner, so main administrator of the EU, and Maria Ramos, who's the former CEO of the APSA Group. Task force. There are 5 questions that they try to explore to unlock more financing for the SDGs. So what is the potential? And to unlock, and then because it was, a lot of them were policymakers and a lot of them were market innovators. So there was a very clear demand for the task force not only to do research and a report, but also to do concrete initiatives, so to show how to do this in practice. So it also catalyzed 7 initiatives, and I'll share a few of them with you later. And then it designing clear actions of who needs to do what. And that is really the main message that it brings, because we sometimes tend to forget, because complex and intermediaries have been evolving over decades now, and to forget that a lot of the accumulated wealth in capital markets is money from pension policy holders, whether it's from savings accounts. It's that collective wealth that the task force gives us recommendations about how to align that with then the collections are formulated in the SDGs. And really to turn the possibility and one of the main findings is financial system. And I will only reflect upon a few of them. Aggregation of the many. And here of the many savers or citizen savers. So that is either through robo-advisors, that through low capital requirements, and that already at market level, or the very mature space of hard nut to crack of how to channel financing into the SME where it's also around into SME capital market in a more decentralized manner. That's also about how can we use digital to make public financing more efficient and transparent and more accountable to citizens. And the fourth is really around how can we embed sustainability thinking, 30 trillion of the US dollars that's available in capital markets that's been screened for the SDGs, also to be screened. And there the report looks at the increased data capabilities for shifting the reporting regime of corporates from self-disclosed to a more Earth-observed regime of leveraging satellite data or remote sense data to either triangulate or validate self-disclosed data, so increase integrity, but also to get more data for more capital markets to be screened for ESG. Sorry. Then, as I talked about, the task force did not only think about what to do and did research, they also catalyzed 7 Pathfinder initiatives that you see on the screen. So these are actual initiatives that are already out there designing citizen-centric finance. And I can just highlight to you a few. One is the Zimbabwean EcoCash, which is the largest mobile wallet in the Zimbabwean market. That during the talks launched a digital SME exchange on the cost of doing due diligence and credit scoring of SMEs, and it today has a caseload of 300 SMEs that are going through due diligence to be listed. So it's a lot bigger than any of the sort of regular stock exchanges in African markets. Then I will share with you a second Pathfinder initiative, which is not a market innovation, but it's really a tool for policymakers to assess their own market and see what are the citizen-centric innovations that are already in my jurisdiction and that I can leverage to innovate the financing of my national SDG priorities. So this is a framework that was tested in a number of countries during the task force period, in Germany, in Spain, in the Netherlands. And what it helps states to capture is really to capture what in our SDG fintech landscape, what a percentage of that is really already innovating on the SDGs. Is it 2% fintech strength? And you can see here on the slide on the wheel, Germany, centric finance for rolling out renewable energy. It can also be in the German case for doing or facilitating localized energy trading through tokenization of energy certificates, using smart grids and solar power. It also gives the states what are the underlying technologies of their SDG fintech landscape. And what you see on the slide again is Germany. And you can see that a lot of the SDG fintechs in Germany are in the sort of lower tech end. They are not really leveraging to a large degree IoT and intelligent assets. So this is one of the Pathfinder initiatives together with the digital SME exchange that was launched by the task force on the 26th of August, but you can find the other 5 initiatives in the report. Another I want to share with you, which is the most scaled example that we found doing the work, which is the ant forest application in China, which quite a number of you probably already know. So it's basically a functionality on a mobile wallet. And if you download that to your mobile wallet, you invite artificial intelligence to give you automated real-time carbon footprint on 18 behaviors. So whether you take the bicycle or the bus, it will give you a different carbon footprint. And then you can save those footprints or green energy points that you're granted. And in the end, you can plant trees. And then what are really the potentials of these types of citizen-centric financing solutions for green? We tried to look at it. And if you try to apply this type of digital carbon accounting on mobile wallets across 7 markets, so India, the US, Mexico, etc., you can actually empower citizens to contribute to a reduction of carbon emissions from public transport of 8.6%. So make citizens real actors in climate finance whereas today the way we've designed the climate financial system is from the top down, but here a digital finance is really making it much more people agenda. And when you go into the report, you will find a number of recommendations targeted at policy makers, also at fintech innovation ecosystems, and at financial regulators. And I've just brought 3 of them with me today to share with you, be visible to citizens, how citizen-centric their financial system currently is. The second report recommends that SDG incentives, because we found that in the fintech innovation ecosystem, only if that are really in on SDGs. So systems, thirdly, it really goes to the heart of this idea of a citizen-centric financial system, extending the right of citizens to also have information, but not only information, also involvement over how their money are used in financial decision-making. I will stop here with the action agenda and thank you invite you to go to the action agenda, the Pathfinder Initiatives, the report with all the recommendations, and the video that Xiao was talking about just before. Thank you.
Yeah, thank you, Marianne. And so I think, yeah, the findings are really interesting, and it provides us a framework to think, how that we can just really contribute to the SDG agenda. And now let's just move on to Alexey, and the floor is yours.
Hi, everyone. I'm happy to be here, and congratulations on this final UN Secretary General's task force, to Marianne and to everyone who was involved, because I think...
Sorry, Alexey, do you have slides to share?
Yeah, sure. I'm just opening the slides, yeah. So just saying, really big thank you for everyone who was taking part, because personally, I think this is a huge, step forward for the whole industry, and this is just absolutely amazing what you have done. So let me show my screen. So actually with EverCity, a company that develops a platform for impact measurement and investment. We're based on extensive R&D experience since 2017, when we launched one of the first, blockchain projects for climate finance markets and pioneered world's first carbon credit transaction blockchain. Since then, we've done a lot of R&D in terms of monitoring and connecting blockchain registries and smart contracts to monitoring tools to enable more transparent and traceable assessment of the impact of the projects. And now we are working on a very big project to issue a digital SDG linked bond. And this is a complicated project that actually has several parts in it, because our aim is to, lead the way here and develop some kind of a framework, a protocol that utilizes blockchain, and this protocol can be used by any market player to issue their own programmable SDG related bonds. So here we are working on 3 pillars. First, we've analyzed already lots of issuances of sustainable development bonds and SDG-linked bonds, such as NL, 2 billion issuance, and some others, to see what are the trends in this industry. And from my blockchain development experience, we understand that the innovations should not be too disruptive, and they somehow should stand on the basis of, you know, the, let's see, market and infrastructure that can really change the picture and you know, help everybody to understand what the technology is about, what are the benefits. And then, while when the technology has the enough level of maturity and adoption, then comes the real disruption. So the first aim for our project is to analyze what's going on there in the market, how sustainability linkage is being made in terms of financial you know, structure of the bond and design, and perform some kind of analysis to see what are the options there, what's the practice on the market, to develop a universal model, financial model that can be used as a basis for development source protocol, which is a set of blockchain smart contracts and registries to provide you know, infrastructure for everybody to design their own bond and to issue sustainability linked bond, you know, in various ways, where, for example, coupon pay measurement and reporting, or some other types of, you know, connecting the financial parameters to the impact of the finance projects. And this is something that is, I've also found that in the UN Secretary General's Task Force report and in other reports and statements by the UN people, by the UNFCCC, who are designing new approaches towards the Paris Agreement, for example. This is actually a way to increase the transparency of the results of green bonds and SDG bonds issuances. So our second aim is to develop this open source solution and you know, enable its wide adoption, and everybody could use it for their own purposes. And of course, the third part also is very important, and we're now we've completed the first part. We are working on the second part, and the third part will be piloting this solution with real market players. We now have a lot of interest from many companies around the globe who want to pilot that. And for the next year, so this is for this year, and we expect to finish all the 3 parts before December, and then proceed to real issuances with some partners around the globe. And as for technologies, this is very important, because in blockchain generation 1, so to say, high emissions, high carbon footprint related to mining, to confirming the transactions in the chain. And this was the main problem with blockchain while we presented it during the UN forums and other conferences. So this is really a big concern. I think this is something that really stops blockchain from more rapid adoption on the SDG related financial markets. New technologies, they're solving these issues. For example, we know several solutions like Cosmos and Polkadot, and also Ethereum 2.0 should be with low energy consumption consensus mechanisms, which are called proof of stake. And some of the solutions are already on the market, so we are partnering with them to test them and to see whether they're a better fit than Ethereum and blockchain and Bitcoin, for example, for these purposes, because we cannot solve one problem while creating another problem. So this really could be a game changer, and we are testing these new technologies to see whether they will really make a difference and enable another feature, which is also crucial, and which is interoperability. Because when we have a lot of registries, a lot of distributed registries, connected somehow, and interoperability here means that we need to connect all sorts of blockchains, public blockchains, private blockchains, to make sure we don't have the double accounting problem. This is a very important problem for the climate finance markets, because I've been involved in climate projects development since 2011. So this is one of the main problems, along with the energy consumption of blockchain and other technologies. And I think we can, I really hope we can solve them and share the results with you. And also we are using some of our prior developments that enable connection of smart sensors to the distributed registry to track the proceeds of the SDG bond and to see whether it's making the real impact or not, and enable reporting. So what we really want to achieve is to issue such a bond in a fully compliant way with real market participants, to test all the ideas that are now discussed around the globe and in UN reports and everywhere, provide a framework that everybody could use simply. And we actually invite everybody to join this exciting pilot. We are trying to do it in an open way, and we are discussing our progress within INADBA and Climate Change Coalition, where I'm not saying this is something that is already there, that is ready, but we have been working on that for many years, and I think now the level of the maturity of technology and level of understanding from the key decision makers, they are now somehow meeting each other in this point of the technological singularity for the sustainable development market. And this is something that really excites us here, and I hope that this would be useful for everyone.
Thank you, Alexey. And I think this is a very interesting concept and potential, interesting innovation, because when we talk about citizen-centric financial system, and how cool it is to issue sustainability linked bond, which can just be used for SDG related investments, and I think that's really something very interesting. And of course, that's now let's move on to the next speaker. And in addition to the bond side, that's I think another very important role for individual is as a potential grant or subsidy receiver. And one specific idea is around the UBI, universal basic income. If with universal basic income, and we can just really address the inequality issue, but how to do that in a more efficient and effective way. And I would like to invite Anna Stone from GoodDollar, who can just share with us of their project and innovation. Yeah.
Wonderful. Thank you for having me here today. Really excited to be sharing the GoodDollar project with such an esteemed group here. Give me one moment and I'll pull up my short presentation for you. 1 second. Technical difficulties, of course. Shoot, guys. Okay, here we go. So let me know when you see my screen.
Yeah, we can see it.
Great. So, well, I can't see my screen, so I hope you guys can. Quickly, I'll tell you a little bit about GoodDollar and we're doing. So GoodDollar is a nonprofit that's focused off of using blockchain technology to deliver a distributed basic income coin, okay? What that actually means is how can we use decentralized finance or value that's stored in smart contracts to actually create and distribute at scale a small daily amount of human being, ideally to every human being alive. So it's actually a real take off of Marianne's discussion, which was about how do we create citizen-centered finance with the actual wealth and capital that actually currently exists in capital markets. So how can we think a little bit different about value creation and value distribution and value circulation in a way that is a bit more human and citizen-centric access as the goal, okay? So GoodDollar is actually a nonprofit that's the corporate social responsibility initiative of a company called eToro. eToro is a capital markets trading platform like E-Trade, like Robinhood, which really has the same mission of how do we democratize capital markets for people. And the mission behind GoodDollar is really, if financial inclusion and financial access is the goal, how can we design products that are based off of the new class of assets, which we believe are digital assets, and actually expand the number of users of those currencies, knowledge and access that people have when we think about digital, okay? Really well-educated groups, so I'm sure I don't have to go through this definition, but income, it means giving a periodic cash payment to individuals unconditionally and unity. And when we're talking about it within the context, actually providing is a crypto asset, actually giving crypto to people in a regular recurring fashion. In the GoodDollar ecosystem, you actually receive basic income in a daily cadence, okay? We're really tackling, I would guess, SDGs 1 and 10, focused off of reducing poverty and also reducing inequality. This is a statistic that I know is very widely used, but 1.7 billion people remain unbanked, and what it means is that mobile connectivity has not actually translated into finance. And what's more than that is that for all the hype that's been made around how blockchain and blockchains and public financing are going to drive inclusion, we actually still don't see that happening yet either, right? So the reason or the behind what we do is actually thinking about how can we design a product that has inclusion at its goal so that every single person that does have an access to an internet is able to claim the GoodDollar asset, onboarded into the digital asset class about Ethereum or Bitcoin or DAI created or enter into more conventional capital markets asset classes as well. So the idea here is actually, again, the why. What's the challenge that we're coming to solve, right? So the challenge is that all around the world, whether it's in the United States, but certainly in more emerging, with communities that are in recession. What does that mean? It means that the people are there, the services are there, but what's missing is the money. There is not enough money in circulation to stimulate the economy. We see this now, actually, as a fallout of the coronavirus pandemic. We see governments facing this constantly, and they're wondering, the people are here, the goods and the services are here, well, the challenge is that a recession that they don't want to spend, that there's not enough funds coming in. And so what has actually been the goal, or the solution that certainly a number of governments, such as in the United States, but also here in Israel, deployed? The goal has been to promote economics that's actually put liquidity directly into the hands of people. Let's actually give money directly to people, because we know that that will stimulate the economy and stimulate collaboration in commerce. Within our context, we're thinking about it as follows. Communities in recession, we know that stimulus that we've seen as a result of the pandemic won't last forever, right? I believe that there is a real role for giving money that then they can use to collaborate around. And so there's a number, so we see GoodDollar coin as to be a complementary currency that enables people to hold it, to use it to transact. And of course, ideally, the idea is that as more and more people hold GoodDollar, as more and more people use GoodDollar, acceptance improve, so it will be accepted by more merchants and vendors, etc. But the more utility it will have, because it will be more widely convertible into dollars or euros or pounds or Kenyan shilling or whatever the local fiat currency might be. This is actually where we really, I would say, we merge nicely with central bank digital currencies, because ultimately the vision would be that GoodDollars could one day be converted into whatever local central bank digital currency may be. The idea is that it's the simplest crypto application to use. So I actually will take, if I can, I'm going to try to show you guys the app and show you how easy it is to use it. I hope so. So this is actually my good. And what I'm going to do is I'm going to claim my daily income. So I actually claimed mine today. I claimed it 3 hours ago, but this is the app. And then you'll see that based off of yesterday, today I actually received dollars that was delivered directly to my phone. Now to the phone, always on everyone's mind. How do we pay for it, right? So this is why I was excited to see Marianne. The idea is to take a proven economic model, similar to a social impact bond or an endowment model, and use that to fund a reserved-based basic income currency, okay? So I would love anyone who's interested to learn more about the mechanics, I'm happy to go through it with you. But the idea is that GoodDollar is a wrapper that wraps around different non-bank savings protocols, okay? So a user can lock their capital in a protocol, the same way they deposit their savings into a bank. Those funds are used for to be loaned around, right? So the staker earns interest. The interest that's generated off of that moves into a reserve right here, which is a monetary reserve that backs good dollars. And over time, we slowly leverage the number of good dollars that are minted relative to the amount that's in the reserve, just like national currencies and just like banks. But enables us to have, excuse me, don't know what just happened. What enables us to create a sustainable ecosystem. So people are earning a market return for staking or saving their money. That interest is used to back the good dollar basic income coin. Good dollar, people receive their interest payments back, and there's a portion of that interest that is used to be distributed as basic income to people on Earth. And so the idea is that as we scale up the amount of capital that funds the system, the more valuable basic income we can serve to the people who are claiming it and using it. So the goal, of course, this is ambitious for a product that actually just launched yesterday, but the goal is an income economy that's actually able to serve billions of people. And the idea is because we're serving both sides, actually both sides of the user. So there are people who are able to receive good dollar. This is money directly, and they're able to use it for local commerce, while at the same time, we're incentivizing the people who have the capital to lock and save their funds via good dollar and to earn their yield, to earn interest on it while knowing a financially sustainable human-centric economy. And so I'd say, what are our next steps and some of the challenges that we're dealing? Scale the savings features. We also are looking for people to work with on impact studies, and we want to increase the number of places where people can spend their goods. But I want to show you guys one thing before we finish, which is I'm off the cuff that we launched yesterday, really true. So I'm going to show you our data. So since when we launched yesterday, what you see here is that there are over 177 people that have signed up and started to and have claimed their first good dollar. We've distributed 184,000 good dollars. Each good dollar is worth less than a cent, so don't worry, we're not breaking the bank here. The idea is that this will scale over time. But the really interesting thing, and my favorite part here, is actually the map. See that we already have inted claimers from over 30 different, okay? So the idea of good dollar is actually meant to be a fully global payment token, okay? So the idea is that we will end up with people who are whole good dollars from all of these different countries. And with that, I believe that I'm well over time, and I would love to anyone after the event to follow up and share more about what we're working on. Thank you.
Thank you very much. And so after using good dollar to achieve a basic income economy, and that's a move to the central bank digital currency related innovation. And I would like to introduce you to Ezechiel, and who is from Cello Foundation. Cello launched the Prosperity Alliance a couple months ago, right? And we, as Fintech4Good, is founding member, and we see a lot of attraction for Celo, and of course that's Celo's work on CBDC is also pretty interesting. And now the floor is yours, Ezechiel.
And so, like a lot of people here, Celo is working all on this idea of financial inclusion to try and help, as Anna pointed out, the 1.7 billion people that don't have access to financial services. And so I'm going to share my screen. So we're doing that through a mobile-based application, which is based on Ethereum, but we have our own called the Cello dollar. But today, I kind of wanted to focus more on really the excitement of what digital currencies can, a Cello dollar, or whether that's a central bank currency. One of the things that I've mentioned was this idea of supporting economies and supporting local economies of governments, and specifically in the time of COVID. Now, a lot of governments are working to provide stimulus money to support their local economy. So whether that's government cash transfer program or direct stimulus payments, things like that. And so one of the things that's really exciting about digital currency behind them is just the impact and the power it can have to really help stimulus funds more effective and more efficient. So I'm going to talk about three aspects. So let me just, there we go. So the first one is on the distribution of these funds. And so for many of you in the US, you'll know that, so when the COVID hit, the US government said, okay, we're going to give people money, obviously stimulus money. The idea was that we could either do it through, if you had a bank account, we could do it through a direct deposit, or if you didn't have a bank account, we could send you either a prepaid, preloaded debit card or a check. But part of the problem with that, of course, is that it just takes a really long time to do that. It's also really expensive, right? So it can take days or weeks for a direct deposit to get put into your account. It can take even longer for checks and debit cards to reach you. And then, of course, then you have to go through the whole process of actually depositing that money as well. And the other thing too is that it's very expensive, right? And estimates for the U.S. government that they're spending anywhere between $20 to $1.50 on bank transfers and upwards of like $3 per check. So you can imagine that it's somewhere in the order of like about $500 million to send out stimulus to around, I think it's somewhere around 320 million people. But one of the amazing things about digital currencies, of course, is that those can be done instantly with anybody on their phone. And it can also be done at extremely low cost, right? So usually less than a penny. But what's more exciting is the fact that not only want to get this money to their constituents, but they also want to make sure that it goes to their local economies, because the idea is that the stimulus funds are there to stimulate the economy. And so the power of programmable money can allow governments, whether it's through a central bank digital currency, to basically program money such that when people receive it, then they're really only able to use these stimulus funds for local authorized merchants. And I should say that this is certainly different than other digital forms of money that you receive. So if you already have money in that money wouldn't be. The idea is that if the government is giving out stimulus funds, that it stays in the local economy and is supporting. But one of the biggest problems that governments all over the world have and have historically had is the fact that when it comes to funds, people tend to save it, because especially these funds come during times of crisis, right? They come during times of recession, and when people are landscape that they're facing. And so it's a human instinct that we save our money, it's hold it for a rainy day and when we need. But the problem with that is that when a government gives these stimulus to get that money flowing through me, right? So that, if I receive stimulus funds, and I can use that money at my local merchant, and then my merchant can go and they can then pay her employees with that money. with the money that she's earned from whatever I purchased, right? And then those local employees can then turn around and buy goods and services from other merchants. And then it just kind of cycles through. And like the idea of this is what we think about is called the velocity of money, which is very simply, you know, how often does a banknote move the economy and then help to circulate, and it's kind of created like the lifeblood of that economy. One of the problems, however, is that, you know, when we have these recessions, the velocity of money actually goes down quite significantly. So I have this quick chart up here, and what it's looking at is in 2008, when the US, the Great Financial Recession hit, and I'm looking at data just for the US, but basically over the 10-year period from 2008 to 2017, the U.S. money increased by over $2, and most of that was from stimulus measures. So whether it was the U.S. Treasury Department creating, giving checks to people to help stimulate the economy, or it was the Federal Reserve using quantitative easing measures to also help stimulate the economy, they basically flooded the market with cash, hoping that that cash then could be used and circulated. But what happened is that, you know, what they hoped would happen was the green line, was that, you know, they'd put this money in and that if velocity stayed constant, then, you know, they'd see this big impact, because, you know, they'd see people using the money, it would circulate, it would increase economic activity. That didn't happen. It didn't happen because people saved. And so instead of hoping to like an economic gain in the order of like, so you can actually see sort of what's happening when people end up sort of saving their money and sort of hoarding it, right, and not using it. But with the power now of digital currencies and with programmable money, we can also start to think about ways in which of influencing velocity. And so there's, you know, it's not a new idea. It's an idea that sort of came about 100 years ago with a German economist by the name of Silvio Gesell, who had this idea that to make people want to spend money, you know, just as quickly as they get it, you know, for stimulus, you'd want to have that money decay, kind of like the products. I think he used an example of potatoes, right? Is that people, you know, you can't hoard potatoes because eventually they go bad. And so the idea was they didn't want people to hoard money forever. They wanted people to use it and spend it. And so Silvio Gesell created this idea of a stamp tax, where if you have a banknote, you would have to affix a stamp on that note every month to make sure that it was valid, and you had to pay a fee for that stamp. It was, you know, still, you know, cost you money. And so the idea was that people would want to spend that money before they had to pay the fee. So it's only natural that you'd actually spend money before you had to incur this cost. And so with this idea of programmable money, you can also now create a demurrage model, right? So you can create within CBDC this idea of a fee on stimulus money that if people receive it, if they don't get it over a certain amount of time, then those fees accumulate to the government, and then those fees can actually then be used for other social welfare, like unemployment or things like that. There's a similar idea that was done by economist David Andelfato, who calls it sort of hot money credits, which is a very similar idea. Of course, you know, you don't have to necessarily do it through a demurrage fee, right? So you can do it through other models. Another model idea of cash back. You know, so for many people, you know, you might have a reward credit card that if you use your credit card at certain places, you'll get cash back. You know, the problem, you know, it's a great incentive for you to spend money, and especially for you to spend money on or whatever, you know, but for most people who don't have banking, they also don't have access to these types of financial incentives and these types of financial programs. And so, you know, you can now program that essentially right into your cash, right into your banknotes, so that, you know, if a government also gives stimulus money to their citizens, they can then take that money and they can use at local merchants. And, you know, if they use it at local merchants, then maybe they'll get a cash back incentive, like 10% back or 20% or whatever it is. And you can also then, governments can use it to target specific industries. You think about, you know, what's been happening with COVID, and of course people can't travel right now, and so our travel industries are hurting, or maybe it's restaurants, you know, and so once maybe these restrictions are lifted and hopefully, you know, we find a vaccine and people can get back to, you know, somewhat of a normal life, you know, start to incentivize people through cash back models on like their CBDC to then go and spend money at these restaurants or at these travel providers or things like that. And it kind of takes the market-based approach as opposed to sort of this government bailout where they end up kind of just giving, you know, tremendous amounts of money just to one, not to other industries. And so that's a hybrid model as well. And we've done a lot of work on this. And so if anybody's interested, we wrote a paper kind of going very much in depth into this to look at how you can do this. But the idea really is, you know, power now of money, right? Whether it's UBI, like Anna talked about, or it is the digital green box, all of these things now can be programmed in to money and make it more accessible, and then also help increase the velocity, increase the incentives for people to spend it. And so with that, I will yield. But I look forward to questions you have. So feel free to either ask them here or to read directly. So go ahead.
Thank you, Ezechiel. And so now that's just we have 3 minutes, but we'll probably extend to another 5 minutes for just one question for the panel. And I want to first ask a question to Marianne, that you talked about the findings from the report, and you also heard the 3 different innovations. And my question to you is that how can innovators like them to just participate and contributing to the digital financing for SDG actions recommended by the task force?
Well, I think thanks for that. All the 3 innovators are doing excellent work, and I think already actioning a citizen-centric system. I think the digital or DLT bonds is exactly where we need to go, what Alexandra was doing, and trialing that in jurisdictions. I think that's you have regulatory clarity on crypto assets, etc. It's exactly the type of front-runner initiatives we need to see. I think especially for Anna, in terms of, there is actually a Pathfinder Initiatives, which is looking at global governance, exactly of these types of global initiatives that the GoodDollar is representing. And it's actually trying to create a space for dialogue, especially between central regulators in developing markets. And it came out of discussions, how can we create a space for dialogue where also central bankers and financial in emerging and developing markets can have an interest with these types of really game-changing innovations that Anna is like to link you up, Anna, with that Pathfinder, and to see how you can engage there, because I think what yours is a game changer for sure, but a dialogue with the regulators in all of those markets. So I will definitely do this meeting.
Very much appreciate it.
Yeah, and that's just now move to the 3 of you, and the same question. It has never been easy for innovators to scale up, from the pilot to just move to the commercialization. All that there will be a lot of barriers. For you, that's the 3 of you. What are the key barriers for you to scale, and what kind of enabling environment which are ideal for you to just grow and then to support the SDG related goals. And that's the start, from Alexey, then move to Anna, then to Ezechiel.
Barriers, I think the first 2017, it was, complete absence of, and there are pros and cons and so on. So the technology was on that days, and the discussion among the industry leaders was just starting. Which is really needed is knowledge, the understanding from decision makers. I think this is very second, maybe not the traditional answer, but big problem, the problem of innovators themselves. So they really should understand that new technologies really need a lot of thinking, really need a lot of efforts, a lot of attempts to develop, and maybe sometimes innovators think that something genius that should rapidly market and be adopted from the end. You just something like a piece of code and themselves need to think about perception of their products and a world order at once, but try to small consecutive steps with the end users, some collaboration. So the third point is quite short. It's some kind of understanding, some kind of collaboration, some frameworks, sandboxes, forums, frameworks, I don't know, anything that could really bring people together, let them sit together in all these issues about technologies and find, understand each other and joint development of such projects and initiatives. So I think what you're something like in line with that third pillar. So yeah, thank you.
Thank you, Alexey. Now move to Anna.
So regulation remains a challenge like ours. What we're really looking for is the space to work. Different countries that are trying for companies like us to what we really need to do is build trust. Digital assets still has sort of a bad reputation, if you will. Still sort of overcoming that. And I think we're not, to Alexey's point, we're not solving everything in a day. We actually need experts in building not just building financial products, not just innovating with new technology, but sociologists, policymakers, social workers, and to actually have the holistic viewpoint of what is the actual real impact. To do those things, to work in an uncertain regulatory environment and to do it properly requires patience and financing. You need to have a long runway. You need to have ample patience, and ample actually runs really counter to startup financing that we see in terms of VC or even ICOs. And it's really unfortunate. In order for us to really innovate and make real impact, I ultimately believe that it's have the staying power with the patience in the money forward, and it's not, and that is how it's going to happen.
Thank you, Anna. And now let's move to Ezechiel.
Great. Thanks. Yeah, I mean, I would echo regarding, whether it's the communication and the trust, having patience. Definitely, I think, especially more of a focus on the financial services sector, and working with as a former central banker, I know how important it is, and how serious central banks are when it comes to regulating and keeping financial systems stable. At the same time, there's all this great promise, and so I think that we, just sort of need to work better, actively communicating and working with regulators to concerns are, and then try to find solutions that will financial inclusion issues that we all want to work on. Financial technology company like Celo, or it's a central bank. All of us want to help solve the idea of financial inclusion. And so I think it's just, making sure that we have forums like this and discuss the things that we're doing. We can hear from policymakers and hear concerns, so we can actually start to collaborate in a way that's more meaningful and more active.
Thank you very much. Thank you for all the speaker from the first panel, and we still have some question that we'll just leave to be the question to be answered together with the second panel. And now that's move to the second panel. We are going to discuss central bank digital currency, the landscape, and also the new trends. And I know that OMFIF have done quite a lot on this topic, and organized a lot of events and did a lot of interview. Now I would like to invite Chris to just start to share with us what did you learn, and what everyone else are doing. And Chris.
Thank you very much, Zhang. Just say a little bit about OMFIF, the official money. What we do. We come from a heritage, very think tank based in London. We have had central bank members of our community for over a decade, and we have offices in New York and Singapore. So many of the centers know and trust OMFIF, and they have used our platform, their ideas, to share their thoughts in private, filling questionnaires and that sort of thing. And this is something that's been going on for some time. And 2 years ago, we did our first ever piece of research, first ever roundtable on digital currencies, central banks and digital currencies. As at that time, the Riksbank, the Swedish central bank, asked OMFIF to do a bit of work in this area, and we've continued to do so every year since, doing more and more. The last 2 years have passed. So in May of this year, we launched the Digital Monetary Institute, which solely deals with digital currency. It's not just CBDC, it's digital payments and wholesale solution providers for capital markets as well. But CBDC is certainly the core of what we have done. And it's been absolutely fascinating. Every week or so, we have a different central bank. Some have talk on the record, some of whom talk off the record about the experiments that they're doing, about the work they've been doing, whether they're looking at wholesale CBDC or retail CBDC, and the motivations for them doing it. One of the things that we've noticed as we have been doing this is that the policy outcomes that central banks desire is something they guard very closely. They've normally got quite a good idea about what they do want and quite a good idea about what they don't want. And it's fascinating to see this, because many of the new market participants in this space, particularly blockchain providers, organizations that have used digital assets or cryptocurrencies, come from a very different heritage. So constant reassurance that central banks need is a massively important part of how this market will develop. I think we will see a central bank digital currency in both wholesale and retail in the next 5 years. But this is dependent on central banks being reassured outcomes are going to be met. They have different policy. A digital currency to be as close to cash as possible. Some are focused on inclusion. Some are focusing on the changing cost. There's a variety of reasons. As cash declines in some areas, the opportunities for a CBDC. In other areas, it's more focused on wholesale, the improvements in the real-time gross settlement activities which central banks and clearing houses have been undertaking. I'll just show you a little bit about some of the research that we've done, because we're a research think tank. We don't have any political bias. We are funded by our members, and the work that we have done, if you just take a moment, I'll show you what we've done with OMFIF's in OMFIF research in recent times. Hold on a moment, please. So here you can see on the OMFIF page, not a current subscriber to DMI, please go on and log on. This is what we've done with some of the central month. Our journal covers articles from the city and other private sector organisations. And literally, here are some of the reports that we've done. And it's if things have changed since we did the first report with IBM in 2018 on wholesale CBDC. Things have become at such speed that the work that we do now in the last few months really makes much of the more sort of theoretical discussions become a reality. It did a report on trust that central banks have around the world with consumers, and this really was very interesting. We did this for our private sector partners, Giesecke and Davidovic, who make the money for the Bundesbank, their currency makers. If you look at this graph here, this shows what users, members of the public think about central banks. And this graph, there are many interesting graphs here, I did find absolutely fascinating, because it's the properties of digital currency developed countries. So speed, ease of use. My apologies if you small, because you might be able to see it on our website. Being widely accepted, the ability to transfer quickly, are things that are far more to those to individuals in those than they are in more developed countries. So as we've gone on throughout the last few months, we've had roundtables with the Bank of France when they've spoken about their wholesale CBDC experiment. We've had a roundtable with the People's Bank, and that really was fascinating. They spoke a lot about the ECNY that they've trialed in 4 cities, and they were happy to answer any questions from our members or from our community about that. And we've got a lot more to come as well. The most contentious issues, I would say, are probably around privacy and anonymity and the use of blockchain or chain. They are the things that we probably see the biggest and hottest arguments between the central banks and also between other private sector market participants about or not. When it comes to anonymity privacy, if you want cash to have as close a similarity in terms of its characteristics to digital currency, then there is some sacrifices that you have to make in terms of the KYC benefits that a CBDC, also some of the programmable elements that we discussed in the last panel. So there are decisions to be made, and there's probably, I would say, a little bit more pragmatism from central banks now than there was at the beginning, partly because they've learned more from private sector organisations, where we have these forums. They learn a lot more about what's possible and what's not possible in terms of programmable money, in terms of anonymity, in terms of how some of these things can be assured. But that is still an area. Another area of great controversy and contention is the use of blockchain CBDCs. You've seen smart contracts, how blockchain can work, and there is interest in what it can do. the crux of the argument, CBDC, if you don't have the advantages that only blockchain can give you. That's really the crux of the matter. You still hear a lot of caution from central banks. Even as early as this year, we spoke to a central bank from a G20 country that said there's no way they wanted anything to do with it, and it was something that was some way off. Even in the past few months, that central bank has changed their mind a bit and are now asking for a bit more information from us. But also, there's still a view that cash is going to. So in terms of a CBDC that whole mainly replaces cash, you do still hear more like 50 to 100 years away to get to that level. But having said that, the speed and the acceleration of the experiments and some of the post-experimental phases as well that we have now seen leads me to believe that we will see much progress on this in the next couple of years. I'll stop there. I'll be happy to answer any questions about research, about the views of central banks on and off the record at any point. And if you want to know more, please go to www.omfif.org, Monetary Institute. And of course, any of you can contact me on LinkedIn as well. Thank you.
Thank you, Chris. And yeah, I think it is really interesting, and from all the research you have been doing. And another, very important market insights has always been provided on CBDC, has always been provided by IMF, and the IMF has been very engaging from the beginning of the CBDC discussion. And now I'd like to give the floor to Sonja, that you share with us what is your latest research finding on the topic. Sonja, the floor is yours.
Thank you very much, Xiaochen. It's a great pleasure to present to you today. My screen?
Yes, please.
So my presentation will focus the cover of which you can see on this slide, and I'm just one of the authors. Zhang is in the audience.
Sorry, Sonja, can you the share screen button is at the bottom of your screen.
1 second. Just 1 second. Sharing my screen. You guys can't see anything?
No.
Can you see my screen?
Not yet.
1 second, because it's telling me I'm sharing my screen. Hold on. Now?
No, not yet.
Unfortunate.
Or you can send your slide to me, and then we have Francisco to speak first, and then after I receive your slide, I can show from my end. How's that?
Yeah, maybe that makes sense, because I'm showing as that I'm sharing my screen, but I'm not entirely sure why it's not popping up for you. So I'll just send the slide back, and then Francisco can go first.
Perfect. Okay. So thank you, Sonja. And now let's move to Francisco. And I think this is also interesting that after Chris shared, all central banks behave differently on CBDC, and we have a central bank, who will share with us of Bank of Canada's experience. And Francisco.
Hey, Xiaochen, thank you very much for the invitation. Let me start sharing my own screen. Hopefully it works.
Yes, it works.
Excellent. I should start with my views are my views only and of the Bank of Canada. So, 10 minutes of remarks. I wanted to what central banks or CBDC, potential designs, and I'll get to the details of the trade-offs and some next steps, at least from the point of view of the banks, to set the stage, and this might be kind of to have a background on what isn't a central bank digital currency. A central bank digital currency is that it's widely available in digital form. So each of those potential for the definition. So meaning components, you wouldn't have a CB, you would have another form of money, right? So widely accessible, nowadays there are digital liabilities of the form of reserves, for example, which are only accessible to financial institutions. Direct liability means direct liability from the central bank, not through an intermediary. Might be a claim on a central bank asset. The public would have a direct holding. In digital form, of course, that's obvious in the definition, but it kind of makes into cash, in which the two previous are present in cash, but just not in digital form. So this is why lots of CBDC as an enhancement of cash is simple now in digital cash. Stage, what I'm going to try to go over, where do they fit in the mandates of central bank? Let's go for of a CBDC. From the point of view of there's two trends that have been of mind for the Bank of Canada. First one is that the use of Canadian in the last few years. So there might be a risk that over time, this trend continues, banknotes might not be for the public at the point. Both depending on the less financially literate or less financially rely on cash. So that's an important demographic that universally accessible means of pay has to cover. The COVID-19 pandemic has potential, and this is something of first trend is what's happening to cash currency, and that includes Bitcoin. But then more recently, the threat that Alibaba coming to the Canadian market and start threatening the Canadian dollar. The same applies for foreign sovereign digital currency, for example, right? The risk that it might getting adopted and circulating in our economy poses a big threat to the sovereignty and therefore to the monetary policy. Another model for central banks is to issue currency out of the interest of protect the privacy, or to the extent that it is feasible, trying to balance other requirements like AML and KYC, the central competing to other offerings might not care as much about privacy. So, like many other central bank of the central bank, well, is to promote the wealth includes, among others, stable, but also a very important motivation. Notes here, then, in this tool, where CBDC might fit in, that we potentially issue a CBDC that encourage the efficiency of the payment system, as well as event notes in case Canadians do not want to more. So let me just go into the how. How could we issue a CBDC when nitty-gritty of the trade-offs in payment? Apologies if it gets a bit long, the effort to discuss the payment arrangement, because it's going to give us a lot of mileage to discuss the trade-offs in the design of to discuss the implications for the ecosystem, banks, fintechs, and entrants. Okay, to know is how to classify payment verification requirements, and I'll just put categories called account-based payment arrangement and token-based payment arrangement. So fixed ideas, think of a token-based payment arrangement as transaction, say peer-to-peer, identify the object that you're being given in that transaction is real versus counterfeit. Now, in opposition, account-based systems in which what you have to identify, claiming to make the payment, only the owner of the account from which the balance is. And this simple, but it's a very simple but very powerful distinction to start thinking about the trade-offs. Okay, let me get that. So, depending on what and the object, so in a peer-to-peer transaction, saying cash, well, it's very cheap, right? You just hand it over and it's done. But in work, which is super, super expensive in electricity consumption and other costs. But there might be also cost in identifying a person in a transaction. So for account-based systems, for example, having to go to the branch and that you're a person, and then having all your documents. So that's also cost. But of course, another important dimension to this is who manages the system and who have access to those records once the system is going. And this determines safety and privacy issues in this. So just to stress all these different trade-offs, one of the key ways to think about there's a trade-off, a three-way trade to the system, it's security, privacy. And let me just give a simple example of that. So if you have a system that has example Bitcoin, well, security, and privacy will be potentially diminished, because to manage security, you have to make it really open or expensive to manage that there's no double spending in the system. Think about now an account for bank. Well, the bank reduces its assets by identifying your identity. Privacy suffers there as well, because the bank will know. It's very important to understand how a CBDC could be. Briefly discuss the different types. One scheme would be an account-based scheme in which the central opens its doors and says anyone can have an account. We think that would be quite most central banks do not have the DNA to deal with the public, to have brand of customer relations. So the other schemes are the token-based schemes, and those are schemes the central bank could delegate components of. One example would be in which the location of the transactions are decentralized, for example, with other schemes in which the verification of transactions are centralized. Basically, when you want to do a peer-to-peer transaction, for example, connects to the central bank server. The server verifies the transaction and passes on the credit to the next of these two type systems in which the delegates to custodians or intermediaries. So it is not so white which scheme will be best, and most likely components of both play a bit of centralization and some bit of delegation. But this, just to kind of summarize, we think appropriately designed will potentially be able to maintain some degree of privacy. Okay, so what's next? So in of the Bank of Canada to think about, at this point, there's no need to CBDC. But instead of I will do it, is just building the capabilities to issue if the need arises. And the reason for that is that put all the pieces in the ecosystem might take 2, 3, 4 years, maybe even more, right? So right now we're working in resolving the technical side, how to ensure private compliance while preserving some degree distribution model. How would banks be involved in the system? And therefore, a corollary of that question is, would that integrate with existing payment systems, which of course would be a competitor of those. We have lots of other questions, but I'll just give those a discussion. And just as a bit of guiding here, so additional resources, Deputy Governor gave a big speech back in February. The announcement of this, and also our microsite, which has international work on CBDC. And back to you. Thank you.
Thank you, Francisco. And I think, yeah, this is, again, very interesting. And now that after we talk about the CBDC, which is definitely, you know, the central bank play a central role of that, and different banks have, central bank have, you know, are at a different process in applying CBDC work. And now that we know more about Bank of Canada's work, and after this, that's I want to give floor to Sonja, and you can just you know talk about the IMF's findings. Yeah, your slides is shared now.
Or the slip up there, I'm not entirely sure what happened, but it's pulling up now. I actually think the sequencing was better, so maybe it's not all that bad. So basically, as I started off earlier, my presentation will be based on a recently issued IMF working paper, the cover of which you can see here. It's basically an extension of the 2018 IMF note casting light on CBDC. I will the links to both in the chat, so you can all read it at your leisure. I am John Keefe, who some of you may know. He's in the audience right now. We have co-authored this paper that covers of issues, and I'm not going to be able to cover all of them in the 10-minute presentation, but I will definitely touch upon the main elements, and I encourage you to read the paper and get in touch if you have questions or if you have ideas and you would like to exchange views. But before I start, next slide, the usual disclaimer that these are solely my views. On the next slide, the disclaimer, if you can just pull it up. Xiaochen?
Yeah.
Xiaochen, sorry. Solely my views of the IMF, the executive board, or IMF management. And so basically, after the standard disclaimer, we'll start off, I will give you a definition of a retail CBDC. And Francisco's given a similar definition. Also, I might repeat myself here. Retail CBDC is a widely accessible digital representation of a sovereign currency that is issued by and liability of a jurisdiction's monetary authority, typically a central bank, and as legal tender. So in this diagram here, what we try to do is like put a retail CBDC into perspective and compare it to other means of payment. So if you, I mean, this is a little self-explanatory, but you can see here that in comparison to cash, being programmable, and the first panel has spoken about this extensively, and so you know, there's various actions, conditions, and so on can be coded to the product into the CBDC to achieve a specific outcome or desired action. And in comparison to stable coins, for example, or crypto assets, a retail CBDC is central bank issued. In the next slide, you will get a view of exploring CBDC. So move on to that shows all the countries that are working on CBDC. Yeah, next slide, please. I don't know if you're having troubles with the yeah, there we go. Okay, so in the first segment, there on the one before that, it's just the table. If you move one back, please. Sorry.
Yes, there's a delay.
It's just basically giving you a table that.
Yeah, this is on this slide. Sorry, there's a delay. Yeah.
Yeah. Yeah, basically, here's a table of all the current projects. In the first segment, you will see the most active CBDC, retail CBDC explorers. These are all like clickable hyperlinks, and I'm happy to show the link to this table that my colleague Zhang has put together. The second segment are the central banks that are exploring, that are confirmed exploring issuing retail CBDC, and the final segment, central banks that are exploring but are unconfirmed, meaning the central bank has not officially confirmed. This is changing by the day, so possibly we're updating this as quickly as we can, but there might be a little occasionally. But I encourage you to check them out if you're interested in the individual country projects. On the next slide, I included a list of possible motivations, and since Chris and Francisco mentioned a lot of them already, I'm not going to go into the details Obviously, in my mind, one of the more compelling use cases to reach people in remote areas that are excluded from the formal sector, enhancing payment system competition, very important, especially with regard to increasing concentration in the hands of large, big technology, for example. And certainly one of the more powerful motivations, and Francisco mentioned that already, is privately issued currencies that might threaten the monetary sovereignty and financial stability of a system. And most recently, and this is something that Ezechiel touched on in the first, is distributing fiscal stimulus, including this concept that allows money to have a certain access, a certain period of time. So certainly this is not an exhaustive, but this is just to give you an idea. On CBDC house, basically depicts like the framework, CBDC framework. The house, once it's up on the screen, consists of 3 layers. The first layer is like the foundational layer that basically speaks about what are the elements that need to be in place before even thinking about issuing retail CBDC, such as obviously cybersecurity, resilience, legislation that needs to be in place, and so on. And design considerations. Some of them are key, like building the product out, like risk-based security, flexibility of the product to account for any change in the future. And then country-specific design options, where countries really have to decide what level of design features they want to allow in their CBDC. And then finally, the roof of the house, that is sort of the strategic objectives of the central bank, is main drivers of CBDC issuance. They should be really determining the rest of the bank opts for. On the next slide, I put together a couple of those design principles. Certainly, what we like to stress is that it's important that design principles are decided independent of technology choices. In fact, defining the problem first, defining the strategic objective is paramount before even committing to a technology. It's really important to do that. It's not, but the other way around. And some of the questions that have been already touched upon by the other panel down here, like the need to balance centralized maintenance authority, how much of that will be entity versus more decentralized. The same thing goes for, and I think both Chris and Francisco spoke about versus complying with financial integrity standards. In the paper, you will find a whole discussion on each of these. So if you're interested in more finding out more, please do check out the paper. And then availability and limitations such as access, very important for remote areas or areas that have been cut to inclement weather events or so on. And cross-border use and use of CBDC convertibility to other currencies. And then the question, should interest bearing or not? And then how much programmability should be built into the product? Of course, programmability is great to have, but the more complex cybersecurity aspect of managing highly complex smart contracts is important for central banks to keep in mind, especially when they're thinking about resources that they have available. And then finally, I want you to, there's one takeaway from this. If I were to choose one key design principle that is the most important, then it's to ensure design flexibility from the get-go, build it into improve the CBDC, and ensure that any changes or evolution to use cases, regulation, or interoperability costs and no expensive rework is required for these changes. In the next slide, I wanted to give you an overview of what we consider the main operating models. You will see 4 models that we discussed in the paper. And the first operating model, and this is something that Francisco touched upon, we have a bank managing the entire process from issuance, distribution. This, of course, in terms of having control over the entire process, but it also means that the central bank will have to mandate, right? So, of course, moving to operating model 2 or 3 would mean giving up control, but having less of the tasks to manage. And then a more novel concept that some of my colleagues wrote about is the concept of synthetic CBDC, where stablecoin issuers are basically parking their reserves in the central bank. I'm happy to share a paper on that as well, so you can read up on that as an interesting way to go about CBDC as well. In the next slide, and most of you will know this, but the main project management considerations that we think are important to keep in mind, thinking about implementation of retail CBDC. Before committing to a specific technology solution, it's very important to have different concepts and so-called proof of concept phases, and typically in line with an institution's procurement policies, but it's important to stress that. Same thing goes for engaging different vendors and technology service providers, and not just picking one, but having a real open bidding process to select or engage multiple ones and pick the one that really brings home all the requirements. Consulting the end users, the first panel spoke about this. We believe extremely ensuring usability, user friendliness, but also promoting trust and ultimately securing user adoption in the end. And then finally, testing out the CBDC and developing it gradually in a pilot or sandbox approach is important to gather data on usage, transactions, sold volumes, to be able to inform, rework the product at a later stage. And it also helps train and build capacity among central bank staff. And finally, consideration in that realm, I think the most important decision on, there might be, I think there's a delay. So in the next slide, you will see central banks, like the very first question they have to answer: does their legal tender definition allow for retail CBDC into the existing legislation, or does the Central Bank Act typically defines legal tender need to be amended to account for it? The other thing that central banks need to be cognizant of, any governance, internal organization, risk management issues that evaluate pros and cons of issuing a CBDC. Also important, just as important is understanding the key risks for operational staff. Outsourcing of some of the activities that we see a lot is great, especially when the central bank doesn't have the capacity to handle these tasks on their own, but it doesn't absolve the central bank from appropriate risk assessment. So any third parties need to also be assessed for risks. And last but not least, and I can't stress this enough, IT operational resilience and security postures need to be reviewed and strengthener on CBDC and design and the entire ecosystem. This is a complex undertaking, and I think IT resilience, cybersecurity resilience is really paramount to is robust and trustworthy. And in fact, I wanted to leave you with some of the risks that we discussed in the paper. These are not all, of course, but some of the main risks that when issuing retail CBDC, especially around transmission of monetary policy, potential disintermediation of banks, and then, of course, that CBDC may increase bank run risks, and in countries with weak currencies, it might lead to a currency substitution or so-called dollarization. You know, I did not include any slides in this, but we have a whole section on cybersecurity. I encourage you to check out because it is important, but I didn't have time to depicts basically a diagram. It's a diagram or bank is faced with when thinking about issuing CBDC. So it's a whole lot, and it's a handful that like bears a lot of risks, operational risk, just the financial risk that I spoke about a little bit earlier, and there's policy strategy and policy risks. But what is different for central banks is that they face reputational risk with huge repercussions that private currency issuers may not have or face in the same way, right? If they fail, they launch a product and fails, not as big of a deal as when a central bank fails, because the level of trust that the institution has or should have among citizens. So the reputational tremendous for a central bank should issue a CBDC that is for some reason weak, poorly designed, robust. So that's it for me. I'm happy to take any, but I think we'll leave that for the panel.
Thank you very much. And Sonia, and this is just to remind me of our early work on CBDC. We started on the CBDC working group and working on the risk and the benefit framework. And I think, definitely that's just remind me of the group work is really interesting. And I think many of the questions that people may have when they are talking or thinking about CBDC are addressed by your presentation and also by the report. I highly recommend people to just go there to read the full report. It's really interesting and very informative. And of course, when we talk about CBDC, and we have to also talk about what's going on in China. And when China make the announcements around the DCEP, and many of the private sector also engaged in the conversation and in some design principle, and also are working on some applications which can help retail CBDC to just really connect with the existing financial ecosystem and offer service to the both business and individual. Now I would like to just invite Elaine and from Huobi, and to just share more with us what's going on in China on CBDC related topic, and also what's Huobi's take on this.
Thanks for inviting me. I'm honored today. Good morning, good evening, everyone. I just heard from Sonia mention about China recently launched our DCEP, as well as Chris Fong of OMFIF, France, the central bank. They also talk about e-money in CNY currency. Sounds like China is quite of leading among all the CBDC project. So today I will, because we already hear lots of the definition of the public sector angle. So my sharing was more focused on the user case as a market participant, user perspective, how we see the initiatives and how's the market looking for future, and what we hope to see more and more initiative from CBDC. So just a briefing, is a listed company in Hong Kong, and is a 100% subsidiary under Huobi Group, whose core business is the crypto digital assets exchange. Now Huobi Group, they're not only running the exchange, but also intend to provide a series of the business from the financial service perspective. Ecosystem among the blockchain include exchange, include as research, university focused on education. Huobi also dedicate to use the blockchain technology to help the traditional industry to improve their efficiency. Business activity can be based on blockchain technology. Myself, I joined Huobi 1.5 years ago. Before that, I'm coming from State Street, who is one of the world's leading custodian bank. So I'm quite happy to be part of those emerging market and of how this market development. And start from sharing. Also, I did not go through the definition of the CBDC. But I will start to characteristics among the China CBDC. So first characteristics, people mentioned that the China CBDC, the purpose is to replace, so it's quite similar to other CBDC projects. While we know in China there's a very advanced e-payment system through the Alipay as well as the WeChat. So question people will ask is, what's the difference, the CBDC versus the existing scheme? I know Chris mentioned about privacy. So in our view, we see some of the privacy attack existed on the is still facing the exposure from the cyber attack or those fraud information, or some of the information is improper release or disclosure by the internal staff. But in the CBDC world, if we're looking at it is on the nominal basis as well as a protected basis, which only exposed to the central bank without close further information to the third-party payment. How that makes happen is because the mechanism, they allows the user, but you can open directly a so-called CBDC bank system through your mobile phone. Of course, you are allowed to connect with the bank account, but you also have the rights connect to the bank account. And that also are characteristics that if people pay CBDC with each other, like individuals, you don't need to have a network connection. You don't need to online in other words. But on the other side, e-payment, you have to based on the online network in order to process. But the CBDC, you don't need to do that because you're not rely on bank account for any agents party to do you just directly happen those e-wallet exchange on the central bank system. And the other characteristics which about China's technology solution. I still remember that last year, October, when China first announced this program, the whole blockchain world is very exciting because people are aware back to 2017, China's government is, they don't have quite welcome attitude, and also somewhere mentioned is to have the BTC trading within China. They think China government announced the CBDC program in technology. However, the announcement later from the official government, it shows that technology infrastructure and the China CBDC focus on centralized technology, which does not use the blockchain. And it goes to two tiers. The first tier is the central bank goes to financial institution. The centralized currency is, they use their existing centralized technology system and or platform connection with the financial institution, those big banks, and they treat as the agent to take care of those users who log in. The central bank users will be allocated with a DCP wallet. And the second tier institution facing directly to like public users or merchants who need out how they want to use that CBDC wallet instead of the currently e-payment system existed. And in that way, there's no restriction what kind of technology you are using. The financial institution, they allowed to use the existing RMB payment clearing system, or they allowed to create the blockchain wherever they see is feasible. So that is quite open for the tier 2, but for the tier 1, where the issuance stage, it is still controlled by the central bank, and they confirm they only